Hello friends, welcome to today's Bitcoin technical analysis. The chart you're seeing here is from yesterday's analysis where I conclude that the market is actually in a pause within the downtrend. So you can see the analysis materializing within the range and ultimately breaking lower to resume the downtrend. So I have updated the technical elements that still support a downward bias. So right now I'll break down for you. Just for your information, this dotted downtrend line is from yesterday, and usually when the market breaks the downtrend line, it doesn't really mean that the downtrend is over. Sometimes it could just be in a pause. I've adjusted the downtrend line to match the new high that was formed yesterday. In terms of the Elliott wave count, yesterday I mentioned about the bearish impulsive wave, but this wave 4 actually is giving me some doubts because of the prolonged sideways action, because relative to wave 2, they should be about the same length. So depending on the market moves, I may switch the count to a corrective A, B, C in blue, and I will let you know what that means after we form our directional view. Indicator wise, it is still bearish. You can see the obvious is that the MACD is in negative territory, and stochastics, what interesting is that it gave us a bullish signal, but then it somehow is still, it seems to be failing. So I will rate the indicators as bearish. So with the downtrend line, the bearish impulsive Elliott wave, and the bearish indicators, the bearish bias remains intact. So what this means is that the market is likely to move lower from this zone down to the 16,590. And just to go into more detail about the bearish bias, is that below 16,900, the bears are likely to aim for 16,590. Okay, so if the market moves to 16,590, then we will be able to confirm that this downtrend is indeed in the corrective ABC formation. So you can see this is the one-time projection of A that gives us the 16,590. And if I were to just scroll back a little bit to the back, you can see that the 16,590 area actually was served as a strong resistance before it was surpassed. Okay. So that's why this level is significant and can act as a target for the bears. And it might also include the buyers to come in to buy the market. For the alternative case, if the bears fail to defend this 16,900, by the way, 16,900 is the 23% Fibo retracement of the wave 5. So if the markets are able to break above that 23.6%, it usually means that these 5 waves down is over, and it is very likely that a wave A is going to occur. So in the alternative case, if the bears break above 16,900, it will not be surprising to see the bulls test 17,140, which was the key level that I identified yesterday at 17,140. Okay, so yep, that's all for today's analysis. If you have any questions, please leave it in the comment section below. Thank you.